Because of the banking facilities not being as easily accessible digitally in this part of the world actually causes a lot more hardship than you would have seen in other markets. And that's really accelerated by necessity, people's requirement for digital financial services. When we started here, I think there was only maybe 4 or 5 of the 27 banks in the market that had a digital offering. And you can certainly see that now that's the top of their priority list.
Our biggest challenge is to have some government action. We very much need what we have proposed to the government, which is Bill C-11, to pass, as we need some regulation in regards to consumer data rights to push our market-led approach that has been moving quite slowly within Canada to a faster pace, as we're one of the last countries in the Commonwealth to make a move off the starting line in regards to open banking.
Overly burdensome regulation. So I'm a believer in the free market, and that is to say an open banking regime where the market participants can build the ecosystem together. I still believe there is a role for the government, but it should focus more on setting up the guidelines, the standards, potentially certifications and monitoring. If there is a highly regulated approach taken in Canada, because negotiations or discussions are still going, it's not set in stone, this would result in very, very high costs for the entire ecosystem for the participants, and then very likely few truly innovative use cases and low adoption.
I believe the main challenge for the adoption of open banking in Brazil is associated with consumer engagement and awareness. It's rather pointless to have a state-of-the-art infrastructure, decent user experience guidelines, and a broad range of data covered with the regulation if the consumers are not aware of their right to retain their personal data, and they do not know how to reap benefits of this particular data sharing.
I think in France, it might be the culture and history. If you compare to the UK, who led the way in this field with CMA9 and OBE, we didn't have the equivalent in France. And what happened is that, banks here just got compliant. We really need to get banks into thinking competitive advantage with open banking and even innovation to drive the business further and generate new sources of revenue.
Aside from the largest banks who've been really good at investing and always updating their technology infrastructure, the rest still have a lot of work to do in order to be able to seamlessly integrate with the fintechs. The second challenge would be the adoption of the consumers themselves, the awareness, and of course the trust. There has to be, of course, an entity that regulates fintechs, and the laws need to be there, which is the case here in Egypt. So the regulations are there. However, the consumer awareness and appetite is something that we will need to definitely work on.
What we hope to see is open banking coming into the market and breaking down some of those barriers, which are not so much a requirement from us to grow the business, but more to reach people that don't currently have access to financial services in the region or lack from quality financial services. So I'd anticipate over the next 5 years that once we see an introduction of digital banks, which will be the first step, and then after that open banking, the end consumer is going to greatly benefit from where they are today.
Our consumer-directed finance movement has been quite slow, but I do believe that over the next couple of years, we will move forward with open banking as our market-led approach, as well as hopefully drive towards government action to have regulations to push our consumer data rights forward, as well as move towards open finance and beyond that to open data in general, similar to what's happening in the UK and Australia, Brazil, and so many other countries. I truly believe that as Canada starts to move forward, we will see the growth, the VC dollar investments into our fintechs, into our market, and our consumers having more savings, as well as our small businesses having more opportunity to grow. If we do have the right actions, Canada can be a leader within the space, as well as drive out better outcomes for our entire community within Canada.
If we have more of a market-driven solution, I think you'll see all the banks, or majority of the banks, we have the big five in Canada, really stepping up to introduce their own solutions, both to share data, but also to ingest data from others, and building those use cases on top of that to give customers a better customer experience around advice and financial well-being, and maybe as far as budgeting and being able to make payments from other accounts. I think we'll also see a flurry of partnerships, bilateral partnerships, where the bank partners with an aggregator or with a fintech to exchange that information, or maybe even with each other to build those solutions, and maybe even the emergence of an industry, a Canadian aggregator solution. So rather than potentially partnering with different aggregators, maybe the industry sets something up to onboard, certify, monitor participants and exchange data.
I believe we will see many regulators in the Latin American region try to push the envelope towards an open finance environment, where the data share is not limited to traditional banking products, and maybe even involve other economic sectors in this discussion. We will need to start talking about cross-border transfer of data, and here I believe international standard setters could be of great assistance to everyone.
We're really hoping on the PSD3, really learning from the experience of PSD2, and I think Europe has started the process with the first implementation. We need to make it easier from an end user journey, and I think that's, even if you talk about strong authentication, customer authentication, for instance, and I think that's the next step is how you make it easier, how you can actually spread open banking, make it easier and spread open banking to other fields and other verticals.
The way I see it, it is going to grow, and it's going to grow immensely, whether you are looking into digital lending, digital insurance, savings, micro investments, and the like. We are going to see plenty of those, and they are going to improve the financial inclusion rates in the country.
Ladies and gentlemen, open banking pioneers, a big warm welcome and thank you so much for joining us. As you've just seen, our campfire is focusing on open banking around the world. We had so many brilliant insights to share. We couldn't fit them all into our campfire discussion, hence the video. A true testament to the incredible growth trajectory of our sector and the impact that open banking is having on fintech communities around the world and real lives globally. Now, as you know, Giovanni, our head of blog content and research, is the first person to have a PhD in open banking, and we are now leading a piece of research. So watch this space for our global index. It's the go-to guide for policymakers and regulators around the world. Now, I wanted to share a number, a global number that we could all focus on to give this some context. So I looked to Accenture, and they've produced a report in the last month, and it's compiled from 20 of the major economies around the world. And it suggests that the open banking market will be worth a whopping $416 billion in the next 3 years. That is $416 billion in the next 3 years. That is a number just to pause and to reflect upon, a colossal opportunity. Now, you're in the right place to learn how to capitalize on this, and also the right place to be inspired so you can channel that for good. And that is a lovely segue for me to fly the flag a little for the UK. We created the blueprint for open banking. So we have valuable lessons learned and insight and a brilliant depth of expertise to share around the world. And this is particularly exciting for us at OBE, given what we're now doing and rolling out in different geographical regions. Okay, so let's dive right in. Fawn will be introducing the speakers as we go through. And we have got a global even expert of panels. I'll start that all again. We have got a superb lineup from around the world of global experts. It was worth waiting for. Okay, and I can't wait to hear from Steve, who is the founder and chief exec of Finicity, especially, and we were just chatting about this before, given the Biden executive order. I think it's going to be game changing, but let's hear what Steve has to say. Now, I am delighted, absolutely thrilled to bits to pass the mic to Fawn. She is our global content strategist. She has done an absolutely amazing job of creating all this content for you. And this is the last time you'll be seeing her for a while, because at the end of the month, she starts her maternity leave. So we thought it was fitting because we think she's the best in the world. So we thought this was a brilliant topic for her to bow out on. So Fawn, over to you. Have fun.
Oh, thank you very much, Helen, for that introduction. Delighted to be here today, especially with the speakers that we have on board. Looking forward to a really, really good chat. And so I'm not going to waste any time because we have a lot to get through. Our first panel is talking about open banking challenges versus success and the real impact it's having on real people. And my panelists are Steve Smith, co-founder and CEO at Finicity, Dan Kahn, Global Open Finance Lead at Plaid in the US, Janine Hurt, CEO at Innovate Finance, and Yuri Tintore, co-founder and co-CEO at Belvo. So welcome everybody, and I'm diving right in. So keeping it practical, what real world use cases have you enabled? What consumer base have they touched? And what difference has it made in real lives? And Steve, I'm going to start with you.
I appreciate that. It's great to be with the group, and this is such an exciting topic for all of us in finance. Watching innovation really spawn from access to data and consumers being able to direct that data in very meaningful ways. Finicity has been engaged in this journey for a number of years and has watched a number of use cases develop from kind of the ground up, very innovative solutions. But some of the things that we're most excited about is how we can enable greater degrees of financial inclusion by allowing by consumers that permissioning access to data that can be used for their benefit in terms of credit, gaining meaningful access to credit, creating online and digital accounts in a very frictionless way, facilitating new lending capabilities that before were very, very difficult, and some of the real exciting things that we're starting to see on top of that value proposition that takes place within a country is now cross-border capabilities that are being enabled with open banking for people who are moving from one country to another and having meaningful financial information follow with them so that they don't show up in a place where they're starting over again. They actually have a footprint. They have a credit footprint. They have history and information that they can use in a meaningful way. And I think that really starts to speak to the full value proposition of open banking when it's not just within the geography that we're talking about, but it truly becomes a worldwide phenomena of being able to move easily from one place to the next and have your data flow together with you and benefit you in ways that are truly helpful to you.
Very interesting. Dan, I want to turn to you. What are your thoughts?
Yeah, I think what Steve said is great, which is, we're talking about financial inclusion and financial access. And at the end of the day, the reason that we're doing this is not because we think that just the data alone is enough. It's that there are developers, there are financial institutions, there are partners out there that want to build really valuable services for consumers. And in the US, we've already seen this, right? Plaid, we work with a lot of different fintech developers, we work with financial institutions, and you see things like, trading fees going to zero on stock trading. I don't think that would have happened if not for people being able to move their financial information and sign up for new and innovative services. And then it benefits the entire market. Steve mentioned lending. I think we've seen a lot of the same things with regards to overdraft fees, right? There's all of these startups that have put pressure on larger financial institutions to reduce overdraft fees. And in the last few weeks, you've started to see financial institutions like PNC Bank, like Ally Bank say, we're going to move to zero overdraft fees over time. So it's actually changing the entire industry, and consumers are benefiting even if they're not yet using the tools directly for financial access. I think that's only going to increase as we put more control in the hands of end users.
Janine, what are your thoughts?
Yeah, I would absolutely echo everything that's been said by Stephen and by Daniel already. And I think one of the great advantages to open banking is very much the fact that it will increase financial inclusion and it will increase financial wellness. And we are seeing that already in some of the case studies. So I think even if you look at specific examples of, we have a few members or a few companies that are in this space. So for example, Credit Kudos, which is ultimately allowing the approval of more people who don't have a credit score to get access to funding. We're looking at things like WageStream, for example, which enables individuals to access their already earned wages throughout the month. Or even someone like Moneybox, who most of us will all be well versed with, but just the opportunity to save and invest and start investing some of your spare change. So I think it's these incremental shifts, these incremental changes, but open banking is very much within the broader context of fintech in terms of enabling more individuals to have access to the right products at the right times in their lives. And so we're seeing just an incredibly positive shift.
And you're kind of enabling this first step on the financial ladder. So talk to us about that.
Yes, as we operate in Latin America, what we're seeing is that we're accomplishing is to enable and democratize the access to financial services overall, right? So 50% of the population in Latin America does not have proper access to financial services. And that starts with simple products like credit cards, and then evolves toward more complex things like loans, mortgages, investment saving platforms. So we are enabling that first step, people getting access to these financial services. And in a way, this generates kind of a global positive economic spiral in these countries. So seeing how we can be in that very first relationship with financial services is not only mind-blowing, but it's also extremely exciting and rewarding for us.
There's so many exciting things that you've all touched on there, but obviously we know that there are barriers standing in our way. So I would like to ask your thoughts around that. You know, what are the specific barriers that need to be tackled to make open banking a success, whether it's in your country or worldwide? Whatever thought you have on that, Janine. I'll start with you.
It's a really good question, Fawn. I think coming from the UK perspective, so we've historically seen the adoption ultimately in the UK and Europe be more regulatory driven, and the US more market driven. So I think there is firstly an opportunity in terms of regulation here in the UK to stand very much at the forefront. But there's also, we need to be sure that we're educating the population, the customers, the wider consumer as well on the benefits of open banking. And this is a key area that we're trying to work on as well, work with the ecosystem, work with our partners, work with Helen and OBE. So I think that's a key roadblock, and just making sure that we are seeing increased adoption and understanding of the benefits as well.
And Yeoh, I'm going to turn to you because you're kind of at the beginning of your journey in LATAM. So what do these challenges look like for you guys?
Yeah, Janine was mentioning on the regulation side, and what we see is that one of the challenges to be able to bring on board absolutely all the stakeholders around open banking. One thing is to start by having regulators and banks being part of the board, but the end innovators, even end users, need to have their voice in that process, and that is actually challenging, right? And if we don't manage to achieve it, the risk with open banking is that some of the agendas of like a very reduced group become more important than the benefit of the end user. So when we're talking about how the regulated environment is going to move forward, it's extremely important to put the customer at the front face, and that is actually a challenge as we see that in Latin America.
And Steve, Dan, from a US perspective, I know Helen has already kind of touched upon the executive order recently signed to give consumers full control of their financial data. Does this substantially help in terms of removing any roadblocks? Does it have an impact? We know the limitations that these things have What are your thoughts?
Go
Yeah,
ahead.
I mean, yeah, I'll let Steve chime in afterwards. I think we're broadly in agreement here, but you know, the executive order is a step right along the way. We already had Section 1033 of Dodd-Frank, and the CFPB had indicated that they were going to write a rule. I think the important thing about the executive order is that it frames everything in exactly the context that Yeoh just mentioned, which is that the reason we want more competition in financial services is so that end users, whether those are consumers or small businesses, can get better products, better services, faster approvals, more transparent, better security around the technology, more control, and then eventually they can get better rates, whether that's borrowing or saving and investing, and have more access. So when we think about like, how does all of this interact, Section 1033 is critical. The CFPB is writing a rule. President Biden is now putting a stake in the ground saying that like, this is important from a competitive standpoint. We want to increase competition in the financial sector. That's going to actually improve competitiveness globally for the US. And I think that is something that is a big deal. Steve, would love to get your thoughts as well.
Yeah, I completely agree, Daniel. And you know, you think about the U.S., it's largely been driven, you know, to date by industry. We participate together on the Financial Data Exchange. There are 200 companies that have come together, fintechs and banks alike, to develop, you know, technology standards to increase security and transparency and traceability and all of the things that, you know, regulators around the world are thinking about in terms of, you know, how do we think about, you know, data access rights and data privacy, you know, regulations and protections, and then how do we think about how do we think about, you know, things like appropriate use of data, and so all of those things kind of come together. Industry can certainly play a role. You hope in an industry as heavily regulated around the world as the financial services industry is, that there can be this appropriate relationship between industry and regulation that allows for the market to truly be open. And I think that's what we're, you know, that is kind of the major message from the Biden administration, as Daniel outlined. It's open is good, and competition is good, and it drives innovation, and it drives choice, and it drives solutions. And we've seen that in many other industries. That said, the financial services industry is it's very important for, you know, safety and soundness to continue to be a part of the overall financial services industry. And so we understand the need for regulation, and in the US market, you know, specifically, you know, the CFPB has the mandate, has the opportunity to provide some guidelines, some rulemaking that will actually, we believe, and I know, Daniel, we're very much on the same page here, remove some of the friction that's associated with industry trying to solve some of those problems themselves. So there are some steps that will be helpful, you know, that can be taken, that we're certain, you know, will be taken, that will just allow, you know, the level of adoption to increase even more rapidly.
Wonderful. And before I kind of go to my next question, I just want to remind the audience that we are going to try to take some questions on Slido. So if you've got some time, please send them in and we will try to get to them. But I want to go back to something I think Janine in particular mentioned, and that's this idea of trust. And this is one of the biggest hurdles for adoption in open banking. How do we go about establishing this? This is massive for us to move forward. So where do we even begin? Yeoh, I'm going to start with you because, again, kind of nascent. In some ways, you've got a real opportunity here to start from the beginning.
Absolutely. And I think it's a fantastic question, and that can probably lead to hours and hours of discussion. I guess Dan and Steve have been talking about this for many, many years in the past. For us, we believe that there are three important pillars when we talk about trust. The first one is building a product that is really customer-centric and provide the best UX. There's a lot that companies like us in the open banking space can do, like ensuring transparency, security, privacy. These are things that end users really value, and being able to communicate that is extremely important. The second one is on the value added by sharing your credentials, by sharing your data. And the more value you provide to the user, the more willing they will be to share their credentials. In the end, offering real value to an end user generates trust. And then finally, the last one is on brand recognition. And then this is where our customers come to play, the ones that build solutions on top of our technology. And they are the ones building the relationship with end users. They are the ones putting their brand in front of the user, and the better brand, the more services, the better well-known they are, the better for the industry. So for us, it's like these three big pillars.
Dan, what are your thoughts?
Yeah, I mean, Yuri's 100% right. You have to build services that are valuable for end consumers and help them achieve something in their life. All of us are very focused on open banking, open finance, globally, how important it can be. But I think we have to make sure that we don't lose sight of the fact that really what we're talking about is the technology at the end of the day. And the best technologies become part of the background and fabric of our lives. When I turn on a light switch, I'm not thinking, oh my God, these electricity engineers are great, like all the things that they've done. No, it's just like part of what I do to live my life more easily, whether it's get in a car, get on a plane, turn on the lights. And like that is what we're going for, is simple, secure, transparent connection that helps somebody go from point A to point B. And then the products and services, there actually is no limit on the creativity that you can build when there actually is access. And so, you know, I think about some of the stuff that Yuri and Steve mentioned around like risks, and really it's, you know, we need the principle to be for all of the providers, whether it's financial institutions, neobanks, fintechs, et cetera, that this is going to benefit consumers. This is a competitive market. Consumers have choice and control, and they're going to dictate which products and services are the ones that get the most adoption. If we're moving towards that world, and I think we are in the United States, I think we're seeing that movement globally as well, then we're going to have a better financial services ecosystem down the road.
So I totally take your point, Dan, around the tech, but also, are we actually talking to people? You know, I always like to use the example, and I did on the briefing call with my mom, who has no idea what I do. She doesn't understand open banking. To her, it's like, you know, speaking Greek. So Janine, how are we actually going out there and talking to real people on the streets to help them?
Well, I'm not sure if I can specify how we're going out there, but I think, Fawn, to your point, it's such an important note to think about the real people and the impact and how they're being impacted. And I do think it's worth looking at how the pandemic and how COVID has affected this idea of trust within financial services, because Nesta put out a report last year. And again, this is UK based, and it's not just open banking specific, it's looking at fintech more broadly. But from their respondents, after the pandemic, 36% felt more comfortable with banking and money management apps post-lockdown, and 23% said they trusted banking and money management apps more than they did before lockdown. So I think we're seeing a real shift in terms of the consumer and how they are looking at digital solutions for financial services. And to your point, that's essentially, you know, it's coming from the young, it's also from the older people, it's from all generations. And the more that we can talk to them and that we can really highlight the benefits, as Dan mentioned, about using these new technologies, we're just in a very positive path if we move that way forward.
And Steve, you have the final word before I have to wrap this up. So Steve, what are your thoughts around trust?
Listen, I think the value proposition, to the points that have been made, is really important. Ultimately, if we deliver on the value proposition, we give the consumer, the small, medium-sized business, the value that they need, and their data is protected and it's done in a secure way, then you continue to build trust, and that's happening at scale. I mean, you think about Experian Boost, which is a really phenomenally successful product in the US on the back of open banking access, and ultimately within seconds you can permission access to your information and add trade lines to your credit line and to your credit file and see your score increased as a result. So, you know, those are the things that we just need to be super focused and continue to drive into all of the things that we've talked about here, and adoption will increase as a result.
Wonderful. Well, a big thank you to my panel for this fascinating conversation. I know we could have kept that going a little while longer. Let's try to keep it going on social for everyone who is still here and listening. And thank you to my panel, but I want to stay with Steve. Steve, you and I have 10 minutes to have a chat. So I'm going to kick off and dive right in. Since 2000, Finicity has developed a tech platform that's put it on the leading edge of open banking practices. You're helping to power the new world of online banking and financial services. But what key challenges as a part of this journey have you faced in evolving to a full open banking platform?
Yeah, I think, you know, the objective in 2000 was a simple one. It was to help people do a better job of managing their money by putting data in their hands where it made sense for them to have it. You know, at that point, most financial data was locked on a hard drive sitting, you know, on a single computer at home, or it was on a printed statement. You know, so people really didn't have financial information where they needed it, how they needed it, in the context they needed it to manage their financial life. And yet there were a lot of things coming, you know, to the table where you could spend money more easily. You just had much less context around it. And so the notion of access and the notion of context were really key drivers for us in the mission to help people do a better job of managing, you know, their resources. And our belief was that if you provide context and you provide you know, real-time information, that people largely can do a better job. And so, you know, that's what we went about. But in 2000, how do you access data, right? How you know, the internet's relatively new in 2000. How do you access data? How do you build meaningful applications and solutions? And a lot of the buzzwords we use today, like cloud computing, you know, weren't around in 2000. So we've seen this journey of both technology advancement and you know, data access, big, you know, cloud-based computing, big data analytics, you know, advanced to the point where we are today, where we can drive innovation at the scale that's being driven, you know, with the notion of open banking.
And I want to stay on that data point because you've been a driving force behind the Financial Data Exchange in the US, which I think you briefly mentioned previously. And it's looking at why individuals don't get the same benefits as big business when it comes to data. So what does this exchange enable, and what lessons can other regions learn in this respect?
Yeah, I think the notion here was that we're better together. As an industry, we can do more together than if we try to be independent in every regard. Obviously, in the US, we weren't taking a regulation first approach. And yet there was an absolute need to improve both secure access and the technology by which, you know, we created interconnectivity. And so it was about bringing like-minded people to the table and recognizing the opportunity to build standards and solutions that actually enhance security, transparency, traceability, you know, the kinds of you know, control and access on the part of the consumer. Provided all of that promise, but it did it in a very consistent, interoperable, safe, and secure way. And by doing that, standards, I mean, we've seen this before where standards, you know, are perpetuated and, you know, rising tides lift all ships, and actually expand our ability to, as an industry, innovate and provide value. And so that was really the objective behind the Financial Data Exchange.
And how do you think the sector needs to drive open banking globally? And is there a right way? I mean, I know we've talked about kind of customer protection, interoperability, standardization. What are your thoughts on that?
You know, I think I think the themes, the important themes are all common. How we get there might differ a bit from a technology, a tech standard. There might be a few nuances around around the edges, but ultimately it is first and foremost about access. The recognition worldwide that the data that is held with data repositories or data custodians should be readily available and should be accessible, readily accessed by consumers and small and medium-sized businesses so that they can direct that data for their own purposes. To have that data locked up and only available to others who use it for their purposes and not for the benefit of the owner of the data just fundamentally seems wrong. And I think ultimately, you know, that train has left the station. Most places worldwide have recognized the fact that the consumer should have full access to the data and should be able to use it and direct it for their purposes. And so I think that, you know, that is a common theme. The other things that will be helpful is getting to more of an interoperable standard. I mean, this is all very new. If you think about, you know, tens of thousands of financial institutions, payroll providers, utilities, insurance providers, and we think about open data in that context, to get the world to a place where, you know, data repositories or custodians are standing up, you know, access solutions or ports, API servers in a consistent way, utilizing consistent methodology. That's a lot of work, and this is very new tech for most of these organizations. They haven't put together an outward facing API server that you know needs to handshake with multiple organizations, needs to understand the bad actors and ensure that there aren't bad actors connecting and needs to apply the appropriate rules for authentication and consent and all of those are big pieces to solve on the international stage, but they are being solved at a tremendous pace. I mean, if you look at the report that you referenced earlier, $400 billion driven within, in total addressable market within the next couple of years. What that means within the next 5 to 10 years is absolutely extraordinary. And so it really is moving at pace, and everyone is feeling the pain of what that's all about. But I think the industry, by and large, whether you're a regulated first market or an industry first market, the industry is coming together in forums just like this to have meaningful dialogue and discussion about how we can continue to improve data access security and get to interoperability and really deliver on the promise of a truly open architecture and ecosystem.
I just want to touch on the small fact that you've been bought by MasterCard a year ago, and what does that mean to you and more generally for the whole global open banking field?
Yeah, I think that MasterCard is a top 10 brand throughout the world, and when you think about trust, you think about MasterCard. And so when we had this conversation, just a few minutes ago about trust really being at the center of successful adoption around open banking, I think that's what it means. I mean, it truly means that, one of the most trusted brands on the worldwide financial stage has put a major stake in the ground and is moving at pace. Well over 1,000 resources, applied globally to open banking, looking at every market, worldwide, and understanding what the opportunities and challenges are within those markets, and working to really cement that relationship between consumer and small and medium-sized business and a data access organization the size and scale of a MasterCard to enable this value proposition that we've been talking about. I think that it speaks volumes to what we've all been working on for so many years, and we're just proud to be a part of that.
Exciting times ahead, definitely. I've got a question here from Slido, and I think it came in a little late for the panel, so I'm giving it to you on the spot. This is from David. He says, what about open banking payments? Can they compete with incumbent payment options in e-commerce, such as credit cards and wallets?
I think that what we're seeing is optionality with respect to payments, right? And I think that the payment networks that are established and working are incredibly important to our economies and our commerce today. That said, they've changed over time, and there have been new methodologies brought to the market in terms of facilitating different approaches to payments. I think open banking is just another one of those, and I think that it's facilitating payments in interesting ways and will solve some problems and challenges that are difficult to solve with existing payment networks. And so I wouldn't look at it as a wholesale replacement. I would look at it as a technology that's just going to further enhance our ability to move away from paper to digital. And so much of what's out there, if you think about payments today, is still in very much a paper manual format. And that's really what we're battling here, is the ability to truly get to digital and real time and do it in a secure way and at scale. And I think open banking has a role to play.
Well, it has been so good chatting with you, Steve. Thank you so much. I'm going to move on to my final panel of the day now, which is kind of the regulatory viewpoint on everything that we have been talking about. So I'd be delighted to introduce my expert panelists. I've got Brendan Jones, who's the CCO at Konsentus. I've got Brian Yeoh, Head of Data Governance and Strategy at the Financial Services Regulatory Authority in Abu Dhabi. I've got Gavin Littlejohn, Chairman of FDATA Global, and Ignacio Pera, who's lawyer at Dentons FinTech Group in Chile. So gentlemen, welcome. I'm kind of outnumbered here. I think I can handle it, but good to see you all. I am going to kick off with some of the things that our previous panel at the beginning of the hour kind of talked about, which was standardization, regulatory frameworks, trust as barriers to open banking. What are regulators doing to address these? Probably focus a bit on standardization, because I know there was a bit of a difference of opinion in our prep call. But Brian, I want to start with you, because you mentioned kind of the mediated over mandated model. So I'd like you to expand on that, please.
Absolutely. Thank you very much, Fawn, and it's a pleasure to be here. I think at the FSRA, when we looked at the open banking, open finance initiatives around the world, we came to the conclusion that there are two broad main models for how open banking works, or how regulatory frameworks for open banking are devised. First is a market-driven model where the regulator doesn't really play a role in it. It may watch over, but not really take any action. Things are worked out between banks and financial fintech providers. The second model, which is, I think, more exemplified in Europe with PSD2, is a mandated model where the regulator takes a much more proactive stance, forces banks to open up access to their data, and in other words, sets out the ground rules. So when we looked at this, we feel that there are two fairly important policy trade-offs that one has to make. First, in a market-driven model, we believe that these are more sustainable outcomes can be achieved, because this is something that is negotiated between banks and fintechs. There's an incentive to innovate, there's an incentive to work together. But at the same time, one of the real problems is there may never actually be an agreement between banks and fintechs. So adoption is poor. In a mandated model, you have a strong case for adoption, but perhaps not a very good incentive to innovate, incentive to do more than what is set out by the regulator. So we think that a third model, which we're seeing to start emerge around the world, a mediated model where the regulator acts as an honest broker, if you will, facilitating the negotiations between banks and fintechs, setting out an appropriate legal infrastructure, but not actually taking that step of forcing access, is a sustainable approach. It trades off adoption. Adoption will definitely be slower than in a model where the regulator says, thou shalt open up your data. But at the same time, we believe it is more likely to be sustainable in the long run. Now, one of the reasons that this particular type of mediated model is important, we believe, is that I think one of the challenges when working in a jurisdiction as international as the UAE is the need to understand the difficulty in achieving standardization. So in a domestic market where there are the primary focus of financial institutions is the local market, yes, indeed, it is possible to achieve standardization because there are many things that a regulator can do. But when you have a very large international population, transient resident population, one must be aware that different jurisdictions will not be able to meet the same kinds of standards as others. So what this means is that I think Stephen raised a really good point. Rather than look for standardization as a goal, we should look at standardization as an aspiration. Instead, what we should be working towards is interoperability. So having broad principles that all parties can agree upon without necessarily forcing our way into a single mandated standard that everybody needs to comply with. So that would be our perspective.
Gavin, I think that previously when we chatted about this, you said you agreed only slightly. So I'd like you to pick that up.
Yeah, so look, all the points that are being made are pretty nuanced. Firstly, let me talk about the mediated model, the market model, and the regulated model. So if you take the position that the customer has rights in their data and they should be able to choose to select a regulated actor to port their data to their benefit, the market-led model and the mediated model don't work very well. The reason for that is the customer could choose to share their data with a party that their financial incumbent party does not wish to interact with. So one of the things we've noticed in all the markets that have had either mediated or market-led is that has led from time to time for market exclusion for companies, some of whom are pretty substantial market actors, because if the customer can't enforce their right to share, the data recipient can't enforce their right to deal. So we've seen in Japan and New Zealand and the US numerous examples of where a market actor has been excluded from the market in a competitive situation. It could be that they charge one company $1 per customer to access and the other company 1 cent. So there's all kinds of ways of having the market ecosystem be developed inconsistently. Let's move into the point now of standardization. So if we think about the technology standards of an API connection as having 3 components, which is the registration and identity layer, the security profile, and the data payload. So I completely agree. Very difficult to reach a point across different markets of standardizing the payload. Products are different. The way a pension is constructed in the US versus the UK versus UAE will all be slightly different. The same with banking products, mortgages, insurance, and so forth. So I don't think that we've got any real chance of getting anytime soon to standardization in the data payload. But the other 2 aspects, the registration and identity layer and the security profile, work a little bit like electrical plugs and sockets and voltages. And I think very clearly we've already seen the Australian market adopt the same sort of standard as we've adopted in the UK. We've seen the Brazilian market then go ahead and adopt that. And we're, I think the US market via FDX is pretty close to going in the same direction, or at least, that's what I've heard. So there is an opportunity to begin to work on the security profile and the sort of registration elements of the standard from a global perspective. And to that end, the Global Open Finance Technical Standards Working Group met on the 10th of March, and it had the FDX in the room. It had the Australian market, it had the UK, Brazil, but also a range of markets that have gone in different directions. So the Indian technical standards agencies were present, as were the Chinese, the Japanese, the Australians, the New Zealanders, the Israelis, the Nigerians, and a whole range of other markets from different places. And we agreed as a first point that we would build a digital library of all of the world's open source APIs and try to agree a common taxonomy of how we index them so that we can look at these different standards side by side, not so that we're forcing any party to join with other parties in a particular standard, but so that we could work together towards a longer term goal of standardizing in those two areas of the API technology.
So I can see on the back end, Brian is shaking his head at some things and nodding at others, but Brian, I'm not going to let you come back on that. Otherwise I won't get through any of my other questions. So you and Gavin will have to take this offline. But I'm going to turn to Ignacio here. If you could push one change in open banking regulation forward quickly in your country or region, what would it be and why? And I think we're all interested in that because most of us probably don't know very much about what's happening in Chile at the moment. So enlighten us.
Well, from a Latin American perspective, I think it may be difficult to say now like a single change, considering that we're just taking the first steps. You know, we're having the first discussions to adopt open banking initiatives, but we can use this to our advantage. I think that if we are smart enough to identify the challenges that open banking pioneer countries as the UK or Australia and other countries have had to overcome, we may not repeat the same mistakes in its implementation. I think that it makes sense that our lawmakers and regulators here in Latin America should be able to identify, the objectives that we need to achieve with open data initiatives and determine, define, and achievable implementation schedules for all parties involved. We heard before that we need minimum security standards in data transfer, and definitely I think that for private entities participating in the ecosystem, they should focus very much on generating high-level user experience that delivers confidence in the system to consumers. I think that one of the major challenges that we will face is to also choose the right regulator, something that we discussed briefly yesterday. The financial regulator is like, when we talk about open banking, is the ones that you would go immediately say, okay, this is open banking, so we go with the financial regulator to develop these initiatives. But I think that if we make that decision for most of Latin American countries or civil law countries, it may be a mistake because the mandate that the financial regulator has is not to improve or innovate, and it's basically to secure the financial stability of the market. So we're not putting the consumer at the center of the discussion if we make that decision. And so thinking of what I just said, I think that if I can choose to one change, maybe we should highlight the importance of the consumer, and maybe we should change the name of Open Finance Initiatives to maybe Data Property Rights Initiatives.
Yes, I hear you on that one. I know Brendan has an opinion on that, but I was going to get your thoughts, Brendan, on from a European perspective, what would you push forward quickly and why?
Yes, thanks. So thanks for Fawn. I suppose from my perspective, it's interesting when you look at, for example, how Europe has adopted, let's call it open banking opposed to PSD2, and you look at how we've gone in the UK. So we've had a more structured approach in the UK with a central entity that has really taken on a scheme type role, and it has driven standardization within the UK market. And I agree with Brian, you can't have global standards, but you can have regional or country standards and so on. But it's also taken a great oversight, reporting to the market on transaction volumes, API availability times, and we all know that fragmentation is the enemy of any new type of implementation within the markets. Now, when we go to Europe, we have none of that in place today. And we're seeing Europe, even today, 2 years down the line since regulation came into force, as being very fragmented. I've been speaking with some big banking groups myself over the last 2 weeks who are still not PSD2 compliant, who you would imagine they would have been on day one. It's disturbing, but that's because it's a very difficult exercise for everyone. And I think if I was going to ask for one thing as we move forward, it would be that regulation is merely the baseline, but we need schemes or something structured sitting above that can lay out the foundation of the infrastructure required, the standards that are applicable, can drive collaboration and cooperation within that ecosystem. So everybody moves together in one concerted effort, and we don't have fragmentation, but we also have oversight of the overall ecosystem as well. There is no one today within Europe who can tell you how many open banking transactions are being processed. But we do know in the UK, at least for the top 9. And actually, if we took an 80-20 sort of rule of thumb, we could probably work out what 100% of transaction volume is within the UK. No one has any idea of what that is in Europe. And as we move forward out of this very narrow definition of open banking, more into an open finance environment, which, let's be fair, all our other colleagues on the call today outside of Europe are talking about open finance, not open banking. We were merely a stepping stone to a greater thing. It would be to take that scheme approach. And I think it's quite interesting. The Berlin group is currently out with a consultation on their open finance specification. Again, very much advocating. Now, I know it's the banks that write for the Berlin group, but advocating that scheme approach. So that would be my wish if I could have a takeaway from this session.
I know we talked about, and back to Ignacio's point, the word open and how this seems to cause a lot of problems. Gavin, I think this is partly your fault, maybe? Can we talk about this?
Yeah, so I mean, back in 2013, I had an opportunity to speak with the then Chief Secretary in the UK Treasury, and we had a conversation about creating an open finance landscape, which included loans, mortgages, investments, pensions, and insurance. And they weren't exactly certain, given the context of the UK stopping the EU and introducing a UK-only remedy, of how easily that would move through Parliament. But what they suggested was that we might want to consult with our peer group, competitors, partners in the industry, and see whether we might make a start with just payments. And at the same time, in the German regulators, they were having a conversation about how you enabled a relative to take care of somebody, informed relative couldn't look after their finances, and enable that party to share the information. And between the German and the regulators and the UK Treasury, we managed to get data access pushed very late in the day into the Payment Services Directive. And we're working very closely with people that had been involved in the Open Banking Project and in the Open Data Institute. And you know, the language that we were using was not about technology, but about creating an open market architecture where the customer had a choice of choosing to share. So that name kind of stuck. And when we were working with the CMA on the development of the UK order through FDATA, you know, we were already by that stage talking to them about the, you know, open banking. 2015, we'd had the Open Banking Working Group, and that name just kind of stuck. And I appreciate the context of trying to sell this to customers, that, you know, it's not their data that's being openly shared, but it's really about privacy law and the right to choose, and for the customer to be empowered to select the partner they wish.
Who's up for brand refresh? I want to turn to Brian and our next question. What should consumers, always bringing it back to the consumers, expect beyond aggregation of accounts and payment initiation? What is next for open finance?
Excellent. Thanks for that, Fawn. I think one of the things to think about are the ability for financial institutions to move further up the value chain using the data that's available through open finance initiatives. So one example of this might be SG Findex, which is an initiative in Singapore, where banks are able to share data with each other at the behest of a consumer. And this is tied in very closely with the consumer's national digital identity, which addresses issues about authentication, security, etc. to access different types of services that previously were not available. The ability to pull together an overall holistic picture of an individual's balance sheet, from their property assets to their investments, to their insurance, to their banking data, their transactional behavior, etc. Being able to pull all this into one place allows financial institutions to give better advice. This ties in very neatly with the idea of having better retirement planning. You can make better decisions if you know, as a financial advisor, you can make better decisions for your customers if you know to a greater degree what their actual balance sheets are. So I think the possibilities are significant. We're going to start seeing some of these products become more common as we move along. And I expect that the next large step after dealing with open banking will be a focus on investments and the ability to pull together the types of data that persons have in terms of their savings, in terms of their investments into mutual funds and securities, etc. And that will be add another much more important block to the whole open finance ecosystem.
Ignacio, I'll turn to you. Do you have a view on this?
Yeah, well, I think that beyond any particular service, one of the exciting properties, as we have discussed today, of open banking and open finance is that it allows us to put data and consumers' property rights over that data at the center of the discussion. So I think that this is a slight distinction that allows that the range of possibilities regarding the products that can be offered to be, as wide as the creativity of the service providers is. That they will have to develop the products, will have to captivate the consumers to share the data with them and develop the products that they wish to offer. And this could be way beyond, financial services that we have discussed today. I think that's just a small proportion of what we can do with, with data.
And I'm going to close this with a question from the audience, and this is from Dan. So this is open to anyone to take. It said, is it incumbent for an open banking actor to educate on both digital literacy and financial education before they facilitate open access to their data? Who wants to take it?
Well, I've very strong views on this, but I'm not sure they'll be well received by all my panel colleagues. I shall have a go if you wish.
Yes, please.
So look, I previously used the analogy of the open banking connections being somewhat similar to electricity. And, people buy the fridge because they want cold food. They buy the television because they want to watch shows. They've got no interest whatsoever in putting their hand in the plug. It doesn't add any value to them. In fact, so the key thing for us as an industry, all of us, Fawn, you, me, the regulators in the room, the industry participants, it's our job to work together as a collective effort to make everything we do safe and sound, to make all the adequate customer protections. And, when the customer then goes and they buys the fridge, or they buy the TV, or they buy the, the mortgage app, or they buy the money management app, that those things should work well for them without necessarily for them having to go and do a course in how to switch on the TV. They don't need to know how the electricity system works in their house to benefit from cold food. So from my perspective, we focus as an industry on making this really good, and that we try and make these applications easy to use and safe to use, so that we don't have to go through the role of trying to provide education and intricate regulation and technology, which is difficult enough for us to understand who live and breathe it, far less trying to educate consumers on it.
Can I just say I sort of agree with Gavin, and in know that I won't fully agree with him. Look, I think if we look at open banking across Europe today, it's been a success in the UK because we've had more of a scheme approach. Where we have failed collectively as an industry is to educate consumers. We use this word open. It has a connotation to consumers that's different to us, okay? And, you know, I get the bit about the TV and the plugs and so on, but unless I know a TV gives me entertainment, I'm not going to go and buy one. Unless I know a fridge is going to do something for me, I'm not going to buy one. So there is a requirement for collective education of society for these new services to come about. It's not going to be a long exercise, but just an exercise that actually there's trust frameworks in place. As we've all noted, their data isn't being exposed unnecessarily. It's about democratization of data and their decision to share data with other regulated entities to deliver the best financial outcome for the payment service user, whether that be an individual consumer or a business.
I'm going to end
If I could jump in on,
okay,
if
Brian,
I could just
make it quick.
10 seconds. I think it's useful to tell consumers, don't stick your hand in the plug.
Wonderful.
If you're using electricity as that, don't stick your hand in the plug.
Yes, yes. A good note to end on. Thank you to my panel. That was really fun. And thank you to everyone for watching. I'm going to hand back to Helen to wrap up.
Wow, we could have let that go on for much, much longer. Thank you, Fawn, and thank you very much to everybody on the panel for being so generous. And I love the provocative bit at the end. We like a healthy debate at OBE. I was going to share my key highlights, but given that we've run over time, and that is absolutely cool by us, it's a great debate. What I would encourage everybody to do is to jump onto our LinkedIn and our YouTube channels, and we will be sharing all of this data. And what we will do is we'll edit the highlights and we'll make sure that you can see it, and it's worth re-listening to. And I do know that our open banking pioneers out in Asia Pac will be downloading this recording over the weekend because obviously they're tucked up in bed now. But my key takeaway would be actually the point around education. It's a note I scribbled right at the end. So interestingly that we finished on that. And also stakeholder engagement. And our regulator in the UK, the FCA, have done a call for input. And one of the outcomes from that call for input was all around engagement and collaboration and education. And I think a nice way to sum it up would be what Steve was saying about as we're all better together. Collaboration is absolutely key. It's a key word. It's what we do at OBE. We get everybody around a campfire as we have done now. And behind the scenes, we do a phenomenal amount of collaboration. So all that remains for me really is to thank the panel again, thank Fawn, wish you the very, very best of luck with your new little girl due to arrive shortly. We will see you twice in September. We're launching in Brazil and I can't wait. And we'll be back with our OBE Campfire on the third Thursday, as always, in September. So I'd like to wish everybody a very, very healthy summer. I think we are all ready for some sunshine and just to relax and recharge. So wishing you the very, very best of health from everybody at OBE. And a big thank you for my team for making this happen. You two are going to get a break, and I know just how hard you've worked for that. Thank you. Thank you, everybody. The very best of health.